And now I'd like to welcome back Carrie Smith, who will be doing another fireside chat with Wallbridge Mining and Marz Cord, and then he's also going to do one with Dore Copper. So he'll be in the driver's seat for the next 40 minutes or so.
Great, thanks, John.
And we actually have something.
I shake hands with you. Thank you. Sorry. Thanks.
Okay, welcome everybody. Marz is just going to hook up his iPad here, and then he's going to run through a little quick presentation on the company. And I just have to read out this little disclaimer, which I've done for everybody before, so maybe I'll just kind of go quickly, just that I'm a mining analyst with Haywood, and we're an independent broker. We're a part of the Canadian Investor Protection Fund, and my comments, you kind of need to seek the advice of a registered rep, obviously. So anyhow, I'll just leave it at that, and I'll let Marz start.
Thanks, Harry.
And then once he's gone through this, we'll be able to have some time for a little discussion about what these guys are up to.
Good morning. My name is Marz Cord. I'm the President and CEO of Wallbridge Mining. Wallbridge trades on the Toronto Stock Exchange under the symbol WM. Obviously, I'll be making some forward-looking statements, so I encourage you to read the disclaimers on our website. It isn't that common for companies to have district-scale land package in a safe jurisdiction like Quebec. And we're fortunate to have, since the acquisition of Balmoral, a district-scale land package about over 900 square kilometers along the Thunder Lake Deformation Zone, about 97 kilometers from the Ontario border where the Detour Lake mine is. And so far, this belt, in terms of geology, very similar to the southern Abitibi belts, but already has three gold systems identified, obviously one being the Detour Lake mine, and then our Fenelon Gold, as well as the Martiniire. So we purchased the Fenelon property from Balmoral in late 2016, continued doing exploration. Successful exploration allowed us to be able to advance the project, but also at the same time acquire Balmoral Resources in 2020, who controlled pretty well the entire land package. So to today, we've come up with a mineral resource estimate at Fenelon that's just about 3.6 million ounces between indicated and inferred. About 60% of that is in the indicated category. And Martiniere, which is a less advanced project, today already has 800,000 ounces, which our last resource report estimate was not included with any of our drilling, was basically historic drilling. So the next update that we'll have at Fenelon will also include the Martiniere, much similar to the last one. Maybe just in terms of ESG, we're very much focused on continuously improving the 6 pillars of our ESG, and we just issued our inaugural sustainability report in Q1 of this year. One of the key focuses for us is partnership with our First Nation communities as well as the communities around. In fact, today, more than 30% of our workforce is made up of Indigenous peoples. And as well as us helping out with the communities in terms of their infrastructure, and we committed to a $1.5 million to a road infrastructure that helps the communities around be able to access not only our project but around the camp. Capital structure, we have about $47 million at the end of September. Today, probably around $42 million. We're expecting the 2021 refundable tax credit from the Quebec government of about $20 million before the end of this year. So having completed the aggressive exploration program this year, which is about 150,000 meters, and as well as other engineering and all-in costs, we're still going to be left at the end of the year with somewhere between $20 to $27 million going into 2023. So it gives us that flexibility to be able to perhaps sustain the kind of market we're having today, and if that sustains into next year, we'll be able to scale back, but still advance the project. Our focus this year with this exploration program is really to update the mineral resource estimate at Fenelon, bring it to that milestone, and be able to carry that into an economic study. Additionally, as a secondary asset, I mentioned with Martiniere, so about 30% of our exploration program was dedicated to Martiniere, to be able to bring that to another multi-million ounce deposit, much similar to what we demonstrated at Fenelon. And regionally, we've dedicated about 10% of our exploration program to regional exploration along this belt. As I mentioned, this is very similar to to the southern Abitibi belts like Val-d'Or or Timmins or Kirkland Lake camps, but certainly hasn't seen the kind of exploration they have and hasn't seen 100 years of research and 100 million ounces. But certainly the prospectivity of that land certainly exists. Our shareholders, Agnico Eagle owns about 9.9% of the companies as a result of the Kirkland Lake being our 9.9% shareholder. Eric Sprott is a little over 18%, and there are some funds that we know so far is about 12%. The balance is in the retail. Maybe I can just talk a little about the resource estimate that we had. In November, we came out with the first resource, the maiden resource at Fenelon. The market expected us to have very similar in terms of quantity of the ounces, but certainly didn't expect the grade to be lower than what we had, what they had anticipated. And part of the reason for that was that the higher grade material in the deposit around the Tabasco Cayenne allowed the pit to be pushed down deeper than what we even expected. So as a result, the pit outside the diameters of the pit got larger than the areas where we had drilled. So there's certainly opportunities for us in this year's program to be able to add to those, and those are in these areas within the pit shell that either didn't have any drilling or they didn't have sufficient drilling to be included in the MRE. And more importantly, that the growth potential in the deposit itself, certainly towards the west, towards the southwest, and then the Ripley zone, which was along the Thunder Lake Deformation Zone, is another area that's not been included in the mineral resource estimate. We obviously have been drilling some in here, also continuing to extend the mineralization down to the Thunder Lake Deformation Zone. So the next update will probably cover an area of about 2 kilometer by 2 kilometer. And really what we see in terms of the resource, we really see that the pit perhaps needs to be optimized. We potentially see the pit to be maybe a shallower pit, somewhere maybe a couple of 100 meters deep, or perhaps maybe 2 small pits, depending on what the optimized mineral resource estimate comes out, and the balance of that being in underground. Now, we talk about underground, but one of the key things about this deposit is that it isn't your high-grade, narrow vein type of mining. This is more of a bulk mineable because we have these high-grade chutes, if you may, that are surrounded by lower-grade material of anywhere between 1, 2, 3, 3.5 grams a ton. That when we really looked at it, we see this as a bulk mineable scenario, much similar to, say, Young Davidson of Alamos, or very similar to Gold X of Agnico, or Jacobina of Yamana. And here, actually, we've got a comparison. On the right-hand side, you see this is the Young Davidson down to about 1,500 meters, and we have the Fenelon on the left side. We've got 2 directions looking north and west, so that way you appreciate not only the continuity, but the thicknesses of some of these zones. More than 50% of the deposit is actually greater than 10 meters thick zones, up to as much as 70 meters. So we see the bulk mineability in here, and that's why the comparison is to the Young Davidson. And in fact, the sensitivity table of our mineral estimate shows in here that we're actually close to about 2.7 million ounces of close to about 3.3 grams a ton, which in terms of resource comparison to even the Young Davidson today is mining about 2.2 to 2.6 grams a ton, and the resource was a little, just about 3.1 grams a ton when they came out with this. So we see our deposit, which is only really meaningfully drilled down to 1,000 meters, already has that potential, but certainly the growth potential for that is there. And I think this slide shows you that, we talked about meaningfully drill this down to 1,000 meters, but we drilled one hole down at 1,500 meters, and we got 4 meters of 17 grams a ton, very similar type of mineralization. Obviously, in this year's program, especially considering where the market is today, we're not going to continue drilling that depth because there's a lot of low-hanging fruit in the upper 1,000 meters of the deposit that we can continue to do.
And Marz, was that line you put there, that was about 1,000 meters below the below surface?
Yes.
That pit shell was about 800 meters deep.
Yeah, that's right. The pit shell is about 640, and this is a 1,000-meter elevation. Okay. So that's, maybe the best way of doing this is actually looking at in terms of just an underground. This is actually a 1.5 gram cutoff, which is our cutoff that we calculated for the bulk mineability. And this is assuming that the entire deposit was at the 1.5 gram cutoff. We already have currently the underground development already done in here. And with this last year, we actually did an exploration drift going going towards the Area 51. The reason we did that is, you know, there's 20 or 30 meters of overburden. We wanted to de-risk the project. You know, although we do oriented core, we wanted to get in there and take a look at this. And sure enough, I wouldn't say surprisingly because we were confident of our model, but it certainly validated the way we've seen the models. These are shear zones with the veins that are going across the entire drift. They're not like your shear gashes, if you may. And it certainly validated the model that we have in terms of bulk mineability. So we talked about Fenelon, and Martiniere is only about 30 kilometers from Fenelon in terms of, I live in Sudbury, I mean, mines are 50, 60 kilometers from each other. We see Fenelon perhaps being the central processing facility, and any other satellite deposit we find along the belt will only help the economics of the Fenelon project. So Martiniere is the second advanced asset that we have. It's already a large gold system. It's a 2 kilometer by 2 kilometer gold system. Today it has 800,000 ounces of underground, or open pit about a little over 2 grams a ton, underground close to about 4.5 grams a ton. But what's more important about this is the fact that the really previous owners did not do oriented core. So the understanding of the geology for us is much better today than it was before. And the last resource wasn't really included any of our drilling. So we certainly are seeing the potential for us to basically doing the continuity of these zones, find shear zones along the way, and there is this triangle in here that really hasn't been drilled sufficiently. So hopefully the next resource estimate will basically look at an area this, over the entire deposit to make it more continuous. And I think one other thing before I pass on Martiniere. Martiniere has only been drilled down to about 400 meters. So certainly there's a lot of opportunities for us to continue finding additional deposit below it. As you can see in here, we've already shown some of the results of our drilling over the past few months at Martiniere. And regionally, I talked to you about it. Certainly there's a lot of prospectivity in here. We just went to Cassot, which is an option property that we optioned from Midland Exploration, just attached to our Martiniere. We went in an area where there was not even a drill hole. We basically followed the structure, and we still had visible gold. And although it's not a discovery yet, but certainly we see the prospectivity of that. Same thing, attached to Fenelon, we have our Grasset deposit, which is already a 5.5 million tons of 1.6% nickel. But what's more important about the Grasset, it also has the right environment for gold. We went in there and followed up on some of the gold exploration. Grasset is only 3 kilometers from Fenelon, and we had some fantastic results in there as well. So these are sort of gives you the prospectivity of the entire land package along this belt.
Okay, great. That's a good update. Thank you, Marz. So first question I wanted to maybe just sort of explore a bit more with you was you've got a bunch of drilling that's been done on Fenelon. You're planning a resource update. What's the timing for that, and how much drilling will be incorporated into that new resource update that isn't in the current resource?
So our plan is to have the mineral resource estimate before Q1 of next year, okay. Q1 of 2023. We're hoping that we can do it earlier, but certainly that's the timeline we have today. The amount of drilling since the last MRE in 2021 was about 60,000 meters. This year would probably another 100,000 meters at Fenelon to be added. So it's about 160,000 meters additional drilling that would be incorporated into the Fenelon. At Martiniere, we're close to about 30,000 meters drilled since the acquisition from Balmoral. So that 30,000 meters will be incorporated into the next resource update as well.
Okay.
One of the key things we did is in January of this year, we did talk about our strategy of being, following up on Fenelon. 60% of our exploration goes to that, 30% to Martiniere, and the balance to the regional. And that was supposed to happen concurrently, but obviously because of the market conditions, one of the key things we're doing is we want to make sure we concentrate at Fenelon, get it to that next milestone, being able to tell the market what the actual value is. Obviously, none of us like where we are today in terms of the market, but what's good about it is the fact that projects like ours, which we don't believe is marginal, will probably be the ones that are going to be at an advantage to be in that position, to be able to bring that to the milestones that we need.
And that incremental 100,000 meters of drilling at Fenelon, what percentage of that would have been infill in this program, or will be infill in this program, and what percentage will be expansion drilling to try and grow the resource? I'm just trying to give people a sense for, you've got 3.6 million ounces today in resources on that project. What should we expect, or what, are you guiding the market to, we think we can grow it by 20% or 10%, or What are you saying?
Yeah, I wish I could tell you what percentage we're going to increase that at, because typically it's done by independent consultants. But one of the key things for us is the fact that deposit is already 60% indicated. We don't have to concentrate a lot on the conversion drilling from inferred to indicated. Right. So a lot of that would be focused on expansion drilling. But the expansion drilling, like for example, when I mentioned within the pit shell itself, you can call that infill, but we also can call it expansion drilling, because really, essentially, you're coming up with drilling mineralization that was never calculated to be in your mineral resource estimate, and within a pit shell probably had that, or we did have it as waste. Right. So the stripping ratio is also going to be improved. So our focus is to improve the quality of the resource and also the quantity of the resource.
Right. Okay. And I cover Alamos, so I'm pretty familiar with young Davidson. It was the old Matachewan mine, which got mined back in the 40s, and it's quite a good mine. I mean, they've got very low unit costs, obviously, as you know. They're mining very nice big widths there. The grade, as Marz said, is in that 2.2 to 2.4 grams, and they're making a lot of free cash out of that mine now. So it's a good model, for sure.
It's certainly analog to ours, and I think I remember I was a consultant for that project back in early 2000s. And one of the key things we realized at the time is that it took them 3 years to realize that it's not a high-grade, narrow vein type of deposit, because the continuity of those high-grade shoots would require a very much denser drilling to get there. And they realized it was more of a bulk mineable scenario. What we were fortunate about is we have a very good engineering team that already understood that. So with the technical team, we realized that this is a bulk mineable deposit, not necessarily high-grade, as it was in Gabbro. For example, we did a bulk sample at Gabbro, 35,000 ton, 18.5 grams a ton. But certainly we realized that you can mine it that way, but you're going to look at maybe a profile of 40, 50,000 ounces a year, whereas we see this potentially, we actually envision this to be about 150 to 170,000 ounces per year at a 5,000 ton a day production from underground. And if you can increase that to above 5,000, you will certainly be increasing the profile of the production.
Okay. And just by way of comparison, Young Davidson is an 8,000 ton a day plant. So if Marz is at 5,000 tons a day, it's a pretty doable project, obviously. So when Balmoral had these assets, I knew Darren Wagner pretty well, and we had done some business with him in the past. He could never really decide if he was a gold explorer or a base metals explorer, obviously. Yeah. And as you say, Grasset is a pretty nice nickel discovery. Just wondering what your plans might be for the base metals assets, because really your focus, I think, needs to be on the gold, and what your plans might be for those other assets within the company, which you're probably getting very little value, if any, today.
Yeah, we're not getting any value for the nickel assets, for sure. The key, obviously, is the Grasset deposit itself is already a very respectable 5.5 million tons of about 1.6% nickel equivalent, which mainly is in nickel, and then some palladium in that. But more importantly, we also have our Sudbury assets. We're the third largest mining landholder in Sudbury after Glencore and Vale, with our parking deposit as well as the parking properties and all other properties around the camp. The key for us is, as I mentioned through the presentation, we've got the Detour Fenelon Gold Trend, that we need to focus on gold. There is really no reason for us to spend any of our shareholders' dollars today going after the nickel assets, but we do want to give value, which we don't get any today. Our focus is, we've been working with a number of groups trying to perhaps put that into a vehicle that our shareholders can benefit from that, either stay within it or be able to do whatever they wish to do with it. But the key for us is that Grasset is attached to Fenelon. We have a very good social license to operate, as I mentioned, with our First Nation partners and community partners. And we don't want anybody that we're probably going to be the largest shareholder of coming in there and make a mess or basically essentially adversely affect our social license to operate. So as a result, we've been mostly interviewing groups that have been interested. We're hoping that we are there today, but obviously today I don't have anything to disclose. Right. But we're hoping soon we'll be able to do that. And that allows our shareholders, we're probably going to, if it is a spin out, we're probably going to keep a certain founding stake, much similar to how we did with our Minnesota properties when we spun it out into Duluth, and certainly kept a founding stake. And every so often, you actually took advantage of that as being able to sell those shares.
To monetize.
We, in fact, probably one of these very few junior companies where our share price was 20 cents, we gave for every 4 Wallbridge share, we gave 1 share of Duluth, and Duluth went to $4. We probably gave $1 dividend at the time for whoever took advantage of that. So we'd like to do the similar scenario to be able to give some of that to the shareholders and keep some founding stake in the company.
Okay, great. Okay, we've only got about a minute or so here left. Does anybody have a question for Marz? If not, we'll probably wrap it up here. Okay, no, great. Thanks. Great update.
Thank you very much.
Marz.
Thanks.
Thanks, bud. That was good. Thank you.
Okay.
Appreciate it.